Good morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a great Wednesday here. And it is Fundamental Wednesday. So I hope that you guys are ready for this pre-market stream. Welcome in, welcome in. Good morning across the globe. It is 8:30 sharp in Singapore, and we have a great live stream ahead of us. Quite a bit of things to go through today, so we're going to take a quick dive into it. Markets are looking kind of interesting today. We'll see if we can keep up with this momentum. Remember, today is a high impact day. So expect the markets to kind of be sideways till we get some important news out, which is the Fed making interest rate decisions, which I'll get to in a second here. So I want to say thank you very much for taking out the time and attending this live stream, because I love all of you guys, and thank you, and thank you. Remember to smash the like button if you find this stream interesting. We do this from Monday to Fridays. And tomorrow we will have a stream that will be dedicated on trade confirmations. Okay, so I hope that you guys will tune into the webinar tomorrow. That webinar is going to be important. Today we will be doing the pre-market live stream, followed by I'll be going through a couple of trade ideas. People who are here today, I want to say this is going to be a big live stream. Okay, I'm going to give you guys a couple of gold nuggets today, some things that I see that you can take ahead of the Fed meeting, and just some overall ways to make a little bit of cash if it pans out. Okay, so there are a couple of things that we will discuss. All right, so let's just do the pre-market breakdown first and then get it out of the way so that we can, concentrate on the things on hand. So thank you for all tuning in, and let's get it. So with the Bloomberg news here, as you know, we always go through the news first, not because we want to read it and make decisions based on it, but because we want to find out how retail traders will be feeling after reading the news. Let me just refresh this real quick, and I want to show you. So job cuts ripped through finance during pandemic. Okay, lots more jobs getting cut. Lilly, some company showing some promise. I feel like this is the 50th company we've heard about that. Future stock rise ahead of the Fed. Anticipation of a rate hold. Obviously, the Fed will not cut rates anymore. They will either hold or hold. They can only hold. Okay. It's going to be hold the door by Hodor. So there's no possible way that we'll get another rate cut. I don't possibly see that happening at all. If they do, that's like just going to add on more to the trade idea that I'm about to give you. Okay, so either way, I think that we should be in a good position to benefit from this. Stock market should rebound a little bit here on the news, and let's see what happens today. Boeing deceptionally alleged in scathing House report, so they got grilled by the House. Congress, etc. World economy seen withstanding virus better than forecasts. You know what? I'm not really that surprised. I think that, the world economy, free markets and capitalism is a great way for, just the world to move forward, right? When you look at the economics of things, people move to where the willingness to pay and willingness to receive are. Demand always shifts to the most efficient part of the frontier, and supply will try to catch up, or will try to achieve the same. So it's no surprise that we will see the markets adjust. Yeah, there's a little bit of lag. We'll have frictional unemployment, and that might cause a little bit of lag within our society. But over time, things will right themselves. We will reach back to equilibrium, and we will roar back. That's the reason why we never get scared. In fact, these moments of drops are all but crisis, and in crisis comes opportunity. So where there is money to be made are the crashes, not the moments when we are up here. That's not money to be made. The moments that money is made is down here. It's when you buy things of your favorite thing at a discount. Okay, we made nice money on the way down. 2 or 3 weeks ago, almost $6,000 on this dip with buying QQQ puts and SPY puts. And now we have some long positions that are, ranging from next month all the way through November, through after the elections. And there's no way that, you can definitely say that the market's going to go back up for sure. But we can always take our risk to rewards and project that outward. Okay. On the Wall Street Journal here, let's have a look here, because I honestly prefer the Wall Street Journal at this point, right? Stocks edge higher ahead of Fed's forecast. Same headline there. Oil rallies on surprise supply drop. Interesting. Okay. Did not know that. A little bit of a rally on oil here. Now, this one, it would be an interesting development for XOM, right? Think about it. Pre-market up a little bit, and I actually do see... okay, let's have a look here, actually. I didn't see this piece of news. Wow, it is really sold off here. I would say, picking up some shares of this company can't be a bad idea, in my opinion. This is a great, great opportunity here, right? When things are red like this is when you jump in and you start taking shares, right? There is also, if you look at it, there is a little bit of a possible supply here. Sorry, a demand here, okay? This may actually be a potential demand zone here. So let's just draw that in real quick. This may actually be a potential play, and we'll have a look. I think maybe want to wait till $34 or so, but looks like XOM's in a free fall, right? We exited out of this one because we got stopped out. Remember, this was a play that we saw. Fundamentally, this business is undervalued, okay? Because they actually do have a competitive advantage and an economic moat within their sector. So it might be a good play, XOM. Buy in some long-term leaps here, hold them. Not a bad idea. Today, we have a IPO, Snowflake, which is, I believe, a cloud-based business data management started by these four guys. And it's apparently going to be offered at $120 a share. I'm thinking, I like cloud tech, so I'm thinking maybe get some leaps. But this is not the trade idea that I'm talking about. So Berkshire Hathaway and Salesforce own both a piece of this company. I'm guessing, let's see. Yeah, they must have done a private equity deal. And so seems like a stable business that maybe you can get. They have been turning profit, so that's a good thing. Okay, Buffett wouldn't buy into a business that's not turning a profit. Okay, U.S. gas exporters. Europe surging prices. Alibaba back career to list in Hong Kong. Okay, Ernst & Young says auditors should play a bigger role in detecting fraud. I don't disagree. Accounting is becoming a obsolete thing, man. It's terrible. Okay, now, Apple news. I want to just cover this real quick before I get into the pre-market here. Many people are going to be very sad that Apple didn't make a move. But let me tell you something. The market never makes a move when you want it to, okay? Yes, there is anticipation and there is all those things. But remember one thing. The market's not going to make a move just because you want it to, okay? What you really want to be watching here with Apple is to hold your positions for the long term, right? You're not in this for a short-term gain, are you? Because Apple is a long-term business, okay? Big hedge funds, big mutual funds own big pieces of this company, okay? And I don't think that they're going anywhere. In fact, I was just telling people in the bot chat today that, I want to see how many hedge funds and mutual funds are adding Apple positions this year. Are they still adding positions? If they're holding positions, that may be a sign to maybe just not add any more positions for this year, okay? But then I stumbled across a piece of, a piece of information that was actually quite mind-boggling. And maybe in the chat, you guys can tell me your consensus about this, because I personally want to know your view, okay? How many of you own iPhones that are older than the current generation iPhone 11? Because from what I read, the statistics says that about 80% of iPhone holders are holding a older generation iPhone, okay? And that makes up for 950 approximately devices, okay? 950 million devices that have not upgraded to the current device. Why? Because everybody is waiting for the 5G version, okay? And this 5G version, when it's released, which is going to be sometime this month or next month, right? That is going to, even if Apple manages to convert, I don't know, half of these people, that's like what, 475 million devices that they will sell, okay? So what this is called is a iPhone super cycle, okay? And the iPhone super cycle, should possibly cause a big revenue rush into the business. Cash flows will increase big time. Free cash flows will increase. Now the issue will be the supply bottleneck, right? Whether they can keep up with production, etc., etc. Does Apple want to rely everything on China. This is the reason why ahead of their release, they're already diversified their production into India, a couple of other countries, and Foxconn has now opened up factories within other nations to help to balance out this supply. Okay. So that's one thing that you want to keep track of. Now, the other thing that you want to keep track of is the services bundle. Okay. I'm going to say it right now that the services bundle that they announced is going to be the main revenue driver for Apple going forward. Okay. Personally, I think it's very attractive that they bundled everything together and put it into a service so that people can pay a flat fee. Like for, I think the basic plan is like what, $9 or $10, and then it goes to like, I think I don't know, $14 or $15, and then the premier version is like $30, something like that. They have a increasing price structure that allows you to take advantage. And I think the mid-level one, you can even use it for a family of 5, up to 5 devices, which is crazy, right? 5 people maybe, not devices, but 5 Apple IDs. That's great. So I'm going to call it right now that these service bundles and the services revenue are going to spike big time in the years to come. In fact, from my perspective, I think that the services bundles or those services revenue will outshine majority of the company's revenue in years to come. You have to realize something. There are billions of Apple devices out there. There are billions. Okay. Now, as long as you remain within the Apple ecosystem, you will be forced to subscribe to the service. Why? Because nothing is synced to iTunes anymore. Name me one person who syncs their phone to iTunes. So because they're cutting out iTunes and aggressively moving to this cloud-based technology where they have data centers holding everybody's data, this is going to cause people to take up these services, okay? And as people take up these services, they're going to cut. They're going to cut out iTunes and they will rely heavily on cloud-based stuff. And you can see that happening all around the world. Nobody really uses iTunes anymore, okay? Unless it's like to store photos or something like that. Okay, so those are the 2 things I wanted to cover. Apart from that, the Apple Watch, yada yada, iPad, blah blah blah. Okay, yeah, sure, great Christmas gifts. They're doing it now so that people will get into the season where they want to buy stuff for each other. Apple always does this, right? September, they release it, hype it up. People get really nice, edgy about it. They want to buy the iPads and this and that, gift it to people. Great, all great for the company. Okay. So tell me, okay, let's see. I own an older one. Me too, same, new one. Many waiting for 5G will explode then. They also have earnings coming late October. Yeah, that's definitely. I love the bundle idea. Amazon playbook move. Yeah, absolutely. I agree with that, Michael. I do spot me have impacted as more people buy the bundle. Yeah, see, this is another thing, Nirav. I completely agree with you there. I think Spotify is going to hurt bad from this one. I think Spotify is going to hurt bad. In fact, I'm inclined. Yeah, this one's gonna hurt bad for Spotify. Because personally for me, right? Let's say for me, I use Spotify right now. But now that Apple has come out with this bundle, right? Apple has come out with this bundle. Now I'm inclined to sign up for this thing. Honestly, think about it, okay? Let's see here. And then they have this whole fitness thing. And this is a really big stab at Peloton too, right? If you think about it, okay? It's compatible with Apple TV and yada yada, right? And you can see your live stuff on there. Okay, here we go. So this is the one I'm talking about, the Apple One, right? Look at the stuff that you get, right? Man, I need to hire the people who do their website, man. It's so clean, it's so beautiful. See, just from the website, I want to get it, you know? Forget it. Forget everything. The website's so great, I want it. I'm just kidding. So here we go. So this is what I'm talking about, okay? So imagine you're a family of 5, right? You can share this with 5 people, $20. Okay, it wasn't 15, it was 20. And so also think about the pricing structure here. It starts at 15 and then goes to 30. This mid-level one is the one most of the people are going to go for. Very few people will go for this one. This is like for the people who don't care so much about, they want unlimited access to everything. They'll go for this. This is like, I want to say targeting the high income group. Okay, high income group. The mid-income group will go for this one, mid-income, right? Now, if every device, okay, so let's say you share with 5 other people. So let's say estimated at 1 billion devices, right? And then you divide that by 5. That's going to be 200 million, right? And you multiply that by 20, right? That's about 4 billion in service revenues, right? That's 4,000 million, which is 4 billion, right? Okay. So that's already 4 billion. If we talk about just, I don't know, let's say 200 million people signing up for this. That's 4 billion in revenues from services bundles alone. I'm taking a very low estimate here. I can tell you the actual numbers are going to be higher. Okay, I'm pretty sure about it. Who doesn't want 200 gigabytes with their iCloud storage? I'm already paying for this. Who doesn't want arcade where you can download games, have your kids play everything? Apple TV Plus. Who doesn't want that? Apple Music bundle with that. This used to be $9.99 alone. Okay, so this is great value. In my opinion, it's the no-brainer for me to subscribe for this one right here, right? And then if you're a high-income person, you'd be like, yeah, you know what? I'll take it. I'll take the bigger one. Why? It has iCloud 2 terabytes. It has the News Plus. It has the fitness thing coming late 2020. You know, if you're elite part of the elite group of society, you would want all the additional stuff, right? And then you have the revenue mix between all three of these. Nobody's in their right mind gonna go for the individual one, right? This is like a gimmick. They put this out there to show you that this is cheaper. You know what I'm saying? This is the main target here, right? If you've studied economics before, you know this. They purposely price a low, medium, and high so that you feel like the medium is the best one, okay? But you don't know, but you're being forced to take this one. They expect 5 people to share, okay? They expect it. So this is an interesting thing about Apple, okay? And so, yeah, just look at the amount of people in the chat here who are holding old iPhones. You can see it. Okay, it's already very prevalent that a lot of people will convert over to the new iPhone when it's released. I can almost guarantee it. Okay, so Apple is a long-term hold. Stop thinking that just because the stock is not rallying on the announcement, dude. This is just the beginning, okay? This is how they do it. They hype it up with a mini event like this. It's always been Tim Cook's strategy to do something like this. And Steve Jobs too, he used to do the same thing. He used to always have one mini event, like a mini event. And then after the mini event, there used to be a big event, the iPhone event, right? And they always hype it up because why? They get 2 times the publicity. So they always do this, okay? So wait for, if you're holding Apple positions, be patient with it. It's a great stock to own long term, right? And I think that the services revenue is what is really going to rock the business in the future. All right, forget about like everything else. So there's really beautiful future prospects for this business. The more that I think about it, all right. Okay, I'm done with my sidelining of Apple here. I don't want to be an Apple fanboy, but it's difficult not to be. Okay, great. Let me just read some of the comments here. You guys are very active on the chat today. I love it. I love hearing from you guys. Please say more things. I love it. Never let a good crisis go to waste. Absolutely agreed there, Francesco. Good morning, guys. Good morning, Jacob. Welcome back. Good morning, Natasha. Welcome back. All you guys, Invictus, Chris. Thank you for attending the stream. Really do appreciate it. Your time and your effort. Many waiting for 5G will explode. Absolutely agreed there. They have earnings coming. Yep, exactly. I love the bundle idea. I know, me too. Amazon Playbook move. Yep, agreed. And so this was the thing we were talking about. Spotify is gonna hurt. You know, the funny thing is Spotify has to pay 30 or 40%. It's something like that. They pay 30 or 40% of the revenues to Apple because they use the App Store to sell their premium subscriptions, right? So people who use the iPhone have to pay a percentage of revenue unless you sign up with Spotify directly, right? So, but then many people go through the App Store, so it's like, damn, for them. Older one. Okay, let's see here. I think the $29.95 will have more subscribers. Cloud storage racks up so fast with high quality pictures. I don't disagree with this, to be honest. I don't disagree at all, Josh. But I think that $30 per month is like, it's like, think about it from a mid-income perspective. I think that burns a hole in your wallet a little bit, right? $30 for a mid-income family is probably stretching it. But I think it's well priced though. I would go for it, to be honest, but I think 200 gigabytes is enough for me because I don't really, like, I save majority of my things like on a external hard drive and, I'm cognizant about those things. Sometimes I don't trust the cloud, yada, yada, right? Apple Music or Spotify. Dude, it's a no-brainer. I'm telling you, once you use Apple Music, you will dump Spotify. I'm telling you that. But the thing is, I like Spotify because of the Discover Weekly. That's what I like it for. Forcing Apple TV on people. That's true. Exactly. Yep, this bundle is amazing. Already paying $19.99. That's what I said. Like popcorn at the movies. I don't like sharing. I'll get the individual. Okay, there we go. Okay, we have one person who will do that. 2-year iPhone. Yes, I will. Absolutely. This event locks in dollars and then they make future phone announcement to add more dollars. Absolutely agreed. I'm a Sunphone user, but man, Apple's too smart with their marketing. I'd imagine beat their ER. Well, we don't know yet, but I'm pretty sure that services revenues will. Would you recommend holding on to Apple Leaps with this current market condition? Absolutely would. I am holding Apple Leaps. The math you did on Apple is per month bundle 200 million. Yep, 4 billion per month. Yes, exactly. I did that per month. So per quarter you're looking at 16 billion, right? That's a lot of money, guys. 16 billion is a lot of money, guys. Okay. Good morning. But friends, myself together to get a family plan. Yep, it's not too bad. That's true. Joe Rogan is on Spotify. Who cares? I'm just kidding. No, I love Joe Rogan. Okay, let's get back into this. Sorry, I don't mean to sidetrack here, but you guys are this chat is super interesting today, so definitely want to see. Okay, let's have a look at the pre-market movers here. Dow Jones, Apple's down 0.25%. What a shock. Boeing down on some bullcrap news. Like the House said this and that and this and that. We just cannot get a break with it, to be honest. Okay, then wait a minute. Wasn't it today the Fed's news? Why do I feel like... Oh, was that tomorrow? No, it's today, right? I'm pretty sure it's today. Yeah, it's today. It is today. Yeah, Wednesday. There we go. Okay. So, guys, today, after market hours, I'm pretty sure. Maybe it might be during market hours. I'm not sure, but let's have a look at this. FOMC statement and FOMC economic projections, FOMC rate decision, FOMC press conference, all happening between 2 and 2:30 today. Highly recommend you guys to trade lightly today. This is not the day you want to trade, okay? Really, like only take scalps, only take a specific type of setup for a day trade. Go with volume and momentum. Do not take swing trades today. This is not the day to swing, okay? But however, I do see the prospects of us possibly rallying, okay? I just feel it. I just feel it, but I might be completely wrong here. Now we have FedEx rallying about $8. I think must have been good earnings. Tapestry up 4% here. Sorry, 8% here for FedEx. Don't know what this company is. Capri Holdings, blah blah blah. Okay, Lowe's Corp 4%. Big loser ADT. Okay, we don't know who that is. Let's look at the heat map here, so you can see Adobe up about 2%, major green here. Let's just refresh this and make sure that we're having, yep, this is the latest one. Okay, UPS, FedEx, sympathy play here. That was a good one. I think Kevin Fomo called this one out yesterday. Was a pretty good play. UPS, yep, he called it. Sympathy play on FedEx, which actually worked out perfectly there. He called that out yesterday. I'm thinking that you probably make money with that one if you followed. Facebook down on some news again. I'm starting to really feel a bit uncomfortable with my Facebook calls, but you know what? I'm going to hold on to them. I have a lot of time on them. It's till November. I'm going to hold through October if necessary. Mid-October, I'll make a decision on Facebook and I'll cut it if I have to. Right now, I'm holding long positions. I'm not worrying about the short term, okay? I'm only worrying about the long term. I do like Amazon where it is right now. This is a potential play, bounce play if the market rallies. This would be a great play to the upside. If you look at it on the daily, it definitely looks like it's doing a bounce. Okay, you can see this one. So nice little bounce here. If it goes well, it should bounce it back up to this level, at least a 3-3 level. I wouldn't take a weekly call here though. Definitely want to play this one as a swing. So I'd say maybe don't play this one today. Maybe wait for the Fed decision to pass and then play Amazon. That's probably a better idea. Okay, but I do like this idea of a bounce play here. It's finding a solid support, bouncing here. Other things that worked well for us this week. Look at Starbucks, where it's at after our break. If you've been following this live stream, you have made tremendous money on this already. It pays to attend the live stream, guys. Okay, remember, we've been calling Starbucks. We called Starbucks shortly after our assessment on the business. It was an undervalued business. Now it's starting to rally. We'll see if this can continue, break out through all-time highs. I have some $95 calls that I'm banking on. And I think that we may continue to rise here with Starbucks breaking out in a bullish formation here. So let's see what happens here. I do like the prospects of this so far. Okay, so keep holding Starbucks. I think it's a good one to hold. Others that have worked out, D-Dog. I called out D-Dog, and look at this one. Oh my goodness. What a rally from the bottom here. 75 is where we got in. I've been holding this one for a while. I cut yesterday and then it continued running. I took 40% off the table, but realistically must have left about 80% on the table there. So it's okay. It's all right. If I see a break above with good volume momentum continuing forward, I may choose to scalp this one today. Keep your eyes peeled on D-Dog today. This is the one that you want to follow. Another one that I took just after I got out of D-Dog, I took my money from D-Dog and put it into Beyond Meat. And this was another great play. We bought in somewhere down here on this dip over here. This is the purple line is exactly where I got in at 134.92-ish. This is where I got in and played this to the top yesterday. Beautiful returns on this one, almost about 40% on this position. I had 5 contracts looking great. I'm going to hold it for a while. My contracts are not due until the 2nd of October. So I do not think, and I have some 148 calls. So they're about to be in the money basically, right? Another great one here with Beyond. And I've been calling Beyond out on the live stream for a while now. So if you have been following, once again, great money made, right? Great money made. So it pays to be here, okay? And if you like everything that we do here, take your time out of your day and just lightly tap the like button, because I really, really appreciate if you could just do that. Just lightly tap, like lightly tap it, you know? Don't smash it. Show love to it. Tap it. The thumbs up, guys. The thumbs up. Smash that button. The thumbs up. All right, I'm just gonna continue reading this here. The math, morning, but friends, Yep, that's true. Kodak news. What do you think? I am not following that news. I don't know what it is. I don't like Kodak as a business. Not gonna trade it. Thoughts on buying calls for DHI? 2 p.m. Fed news. Yep. Capri was called out on CNBC. Fast money. Okay. MU. Tesla, I have a weekly call expiring 18 September. Whoa. Okay. Thank you for having the live stream. Absolutely no problem. Nah, smashing the like button. Thank you for doing that, man. Thank you. Let's see. Can we get to 100 likes today, guys? We need 39 more likes. Can we do that today? Can you guys show me that you are loyal supporters of the Everyday Growth Advisors live stream? And the fact that I give you guys fire call outs. Okay, now moving on here. We're gonna do the breakdown of Chipotle in exactly 3 minutes. We usually take about 15 minutes to do the breakdown, so we'll be fine with that. I wanna do the SPY, Nasdaq, and the Dow Jones technical breakdown here. So let's get that done real quick. Okay, so what am I seeing on all 4 of these so far? Great stuff so far. Okay, let me just show you real nicely here. Remember, we were all scared last week and we were like, oh my God, everything's selling off. Now look at what just happened. Remember, I never moved these channel lines. So now we are back into the channel here. We came down, we tested this 23.6 FIB retracement. We tested the 38.2 multiple times, and now we are back into this channel up here. So chances are that we will do a bounce somewhere here. Okay, now this today is a key level to break here. Okay, this is a key level. Like if the Nasdaq rallies today, this is a key level to break, and then it needs to take out the 61.8 Fibonacci retracement here. This will be the next important point. What I do see is us smashing through this, coming up here, bounce, go down, try to touch this bottom channel, and then start to go up to the middle of this channel here. So that's what I'm seeing, and that's what I hope happens. I said that in the previous live stream as well. I don't see us going like that, obviously. You don't do that. The market never does that. We have waves. Remember, the market is a human. Wave in, wave out, wave in, wave out, wave in, wave out, right? And now we'll have to have a, depending if this is the end of the wave out. If this is not the end of the wave out, we may go further up and then have a wave in, right? And then touch this bottom channel here. It should coincide with the 50 retracement here. So I want to say this is probably a really nice zone for us to touch before going up. This is a Nasdaq, by the way, okay? So this level will be the level to hold here. This will be the level to hold. If we go below this level, it may be another test of the 38.2. So we don't want that, okay? However, I did also say that there's a high chance that we do this, okay? And if we do this, then that's going to be absolutely terrible for us. But you know what? It may take a while for us to get there. So I want to say maybe one more wave and then up. Both are possible options, okay? Now that's from the Nasdaq perspective. Now let's look at SPY. SPY has been in this channel for a while, right? In this upward channel. I drew this channel a while back. I haven't moved it. It's been there for an oblivion amount of time. and we can look at our fib retracement. So we came down during the sell-off, and we tested this bottom channel here. That was a great channel test. The 61.8 was the first one. After that, we had a major support down here as well, which I drew in with the green line here. So these 3 green lines were major support levels. And now we are seeing the same thing. We need a break above the 38.2 here. This would be the important zone to break. What I see is us going up here, coming down, testing one of these, the 50 retracement, or any other, maybe possibly going down to this channel here, and then continuing this channel up, okay, back up here. So what I actually want to do here is really quickly add in a middle channel so that we can see where the middle of this would be. Okay, so let me just go ahead and do that real quick. So this looks to be about the point here. I want to say right there. Perfect. Okay, great. So that will be the point up here. I want to say, oh, we went onto the wrong chart there. I want to do 4 hour, and that's the one right there. So the middle is going to be somewhere up here, which is actually pretty far away. So I don't think we'll go up that far that quickly. That would be crazy. But how, actually, I take that back. If the Fed says some crazy stuff, it's possible. But at the end of the day, I think a drop before a pop, that will be more likely. And I would prefer that, to be honest. I would prefer that. I don't like things to rally hard so quickly. I prefer slow and steady. That's my way. And that will be greater. Okay. Now the Dow Jones Industrial Average, completely different thing, right? Has been staying within this channel. No problems at all. Chugging along. Great companies that are selling at discounts. Boeing, another, I'm just saying, Boeing is one of those you just hold for a couple of years and you're rich all of a sudden. Crisis opportunity, right? Crisis opportunity. Okay. This one, nice consolidation above the moving averages here, showing strength. Might go up here, come back down, and then another wave up to the upward channel. So chances are that's the projected move for these indexes. Now, today being bearish or bullish, I think that we should be cautious and don't trade too many things today, okay? As I said, follow the momentum and follow all of those things. It's really, really important, okay? Come on, guys. We need, how many? 16 more likes. Can we do 16 more likes? That would be really great if we can. Let's get that. There goes my like. Thank you. I only like if I'm the 69th like. Take it or leave it. Fine, be like that. 20 more likes. Time for short-term SPY calls. I wouldn't do that just yet. Thoughts on TQQ? Okay, we'll do that. Like, where do you find the Slack information? What Slack information? Okay, great, awesome. 9:02. Let's do what you guys are here for, the fundamental analysis of CMG, Chipotle, the ticker of the week. I'm going to take a sip of water here for a second. Welcome into the stream, guys. If you're here, make sure you smash the like button. We do this Monday through Friday, educational stream, not one of those streams where we're going to hand out fish, but we teach you how to fish. I give you the breakdowns. I tell you what I'm looking at. I break it down with you step by step. Tomorrow, we'll be looking at a webinar for trade confirmations. I hope that you guys tune in. It'll be a great one. Thank you guys for taking your time to be here. So, great. All right, let's get this done now. CMG, this is the ticker of the week. We have been covering it all week. I did say right even before I did this valuation that it seems to me that the business is slightly overvalued. Okay, so I'm going to show you what my valuation was in a second here, and I'll show you how I got it and how I got to it. But let's just go through the fundamentals of this business real quick. Okay, now we went through the 10Q on Monday, and the business is slowing down, but it's not slowing down as bad as we expected. Okay, the revenues are actually not affected that badly. So let's look at the trailing 12 months here. And we can have a look at the income statement so that we can look at this. This is your job of a financial analyst. We look at the income statements, we make sense of what we're looking at, and we project them outward in order to verify if this business should be making these cash flows or not. Okay, so gross profit here at about wait a minute. Yeah, okay, we're in the right one. About 1.414 billion. Now look at the difference between. So we had increasing revenues, right? Oops, wrong color. We had increasing gross profits here. And the trailing 12 months compared to the 2019 after COVID impact is actually not that bad. Think about it. 1.14 billion, and then you have 0.98, right? We're off like by, I want to say, I don't know, 10% or something. It's not too bad for a business like Chipotle, which should be severely impacted. I think that, you know, they're doing much better than anticipated. Oops, sorry. So for that matter, I feel like, you know, it's still a pretty good revenue for the trailing 12 months. Okay. So just to break it down further, look at this over here. So this is macro trends. You can use macro trends for a lot of different things here. So I'll just go through the revenues with you guys. We really concentrate on revenues here because that's the cash flow into the business, right? And actually, if you want to go even one step further, you can go. You can go cash flow from operations. There we go. This is more important. Okay, so cash flow from operating activities. Okay, and so you can see it's been growing at a good pace, but you don't get 2020 numbers in here. So the only way you can get those numbers is by looking at the revenue, and they have it by quarter here, which is what I like. So look at this. So 2019, okay, quarter by quarter, you see increase. 2020 March, look at this. It actually wasn't too bad. They only dropped by like what, 29 million. Not too bad at all. Now look at, by June, look at their profits. It's still pretty solid, right? That's why investors were going on a frenzy here, okay? But now the thing is that, is the stock price warranted? That's the issue, right? Do the cash flows from operations warrant such a high stock price of $1,400? I don't think so, okay? So the market is a balancing machine. When it goes irrational, then it corrects back possibly to intrinsic value, and then back higher again, okay? So I wanted to look at the financials a little bit more, okay? So from your gross profits here, you can see that your net income is still positive, okay? Trailing 12 months are still positive. The business is not in a loss, which is better than most businesses, okay? And look at the balance sheet here, okay? Balance sheet, actually, you know what? Skip the balance sheet because it's not, we can look at other things. The only thing we need from the balance sheet are these things here, okay? And we'll go ahead and get into that. So now cash flows. Look at the trailing 12 months operating cash flows. Trailing 12 months cash flows from operations are not even affected that badly. Look at it. They still have 0.73. It's more. In fact, they beat their operating cash flows. So this is actually a pretty damn good business. It has really suffered the shocks of COVID really well, okay, in my opinion, all right? It's doing great. I think it's doing great, okay? Free cash flows doing pretty good as well, right? This is your free cash flows from the business after deducting whatever expenses you have, okay? Now, look at some of these metrics. 3-year annualized. Net income at 148%. Diluted EPS at 153%. They have operating income of almost 100% and revenues at about 12%. This is a nice little growth company, okay? Return on assets at 5%, return on equity about 15%, return on invested capital about 5%. So whatever money that they're putting down on stores actually gives them a 5% return. That's good. Net margin at 4.5%. That's awesome, okay? So remember what we always talk about, quick ratio and current ratio here. And this business does have quite a bit of inventory on hand. So quick ratio here and current ratio, both above 1, very solid business, has sufficient assets to cover liabilities. This is a great business to own. The only thing is, look at the price to earnings ratio. Ridiculous, right? 140. Obviously, business is slightly on the overvalued side. If you were to compare its PE to the industry average, it's definitely higher than the industry average, okay? Debt to equity here, more than 1, but that's because they are smart with the way that they take debt, okay? And so their debt is actually not a big problem here because they have enough assets to service their debt and the liabilities, okay? By the way, this company has got untapped credit facilities that they have not used, and they do not take on any other additional debt. Therefore, they don't need interest coverage, which is a beautiful thing, right? So it's a positive cash flow business running during COVID. That's great, okay? Now, I want to read, I just want to read you a portion of what the bulls and the bears say in this Morningstar report here. So this is what the bulls are saying about Chipotle here. CEO Brian Nichols, path to performance, emphasizing brand visibility, digital enhancement, second make lines for delivery mobile orders, day part expansion, and food waste reduction has improved Chipotle's top and bottom line results. Plans to accelerate Chipotlane, which is what I was telling you guys about, a pickup window and other alternative restaurant formats could lift longer term revenue and cash flow growth. This is something Chipotle did years ago, and it's paying off in its weight big time. Okay, big time, big time, big time. This is what happens when you digitize your business at the right time and you have foresight. The stewardship of this business is excellent. The CEO is doing a good job executing against secular trends, which is the cloud-based move of its business. Okay, making everything wireless, making everything digitized. It is the way into the future. Okay, though more expensive to source and clouded by Chipotle's food safety issues, naturally raised proteins and organic produce are aligned with current consumer preferences. This is very important. Okay, and coronavirus. So here's what the bears say now: coronavirus-related restaurant closures and dine-in restrictions pose an unprecedented industry disruption and will require operators to operate more efficiently. Well, we just saw the impacts of this. Wasn't that bad on Chipotle, right? Fast casual restaurant competition has intensified and switching costs are non-existent. Mexican concepts make up almost 1/4 of the $52 billion US fast casual industry. Now, this is a fair point. Chipotle doesn't have a economic moat. Okay, it doesn't have an economic moat. What stops you from buying from Chipotle today or going to I don't know, another place that sells exactly the same substitutable product, right? So this company does not have an economic moat. It's selling food. Food is very subjective. Okay, today you might want to eat frijoles, but tomorrow maybe you don't feel like eating frijoles and you go eat something else, right? So that's what they're saying here. It's you might just switch to another brand, and that's a fair point. But the thing is that the CEO has spent a long time building up the brand presence, and so I feel I miss Chipotle. To be honest, I do. I really wish we had it in Singapore, and it's dope from my perspective. I used to rely on it a lot in college, and I really do like the business. Okay, Chipotle must contend with evolving customer percentage preferences, wage increases, and negative publicity associated with food safety incidents. They had some E. coli, salmonella scares in the past. Those presented great opportunities to buy the stock at discounts. It was crazy. This was a COVID drop, but before then, we had a couple of opportunities to buy the stock right here when it was trading close to $400, and now it is trading at $1,002. So if you would have bought in then, ooh la la, you made lots of money, right? There are fewer suppliers of naturally raised proteins, so food shortages and unpredictable pricing are possible. So this was the one thing that we went through on Monday through their SWOT analysis, right? And that was something I was talking about. They have very few suppliers, and that poses a risk to them, actually. Whoa, 99 likes. Can we get one more? Can we get some likes in the house? I really appreciate you guys. Thank you very much for smashing the like button. You guys are just blurting out calls. Yeah, that's what people do here for this live stream. Sometimes when I get time, I break down these tickers for them, and I help them out. So, let's see. All right. Qdoba. Yeah, that's the main competitor I was reading about. Similar. Yeah, that's true. Dos Toros better than Chipotle? Okay, I don't know about that. I haven't tried it out, but you know what? Honestly, I'm open to eating all kinds of food. I love food. I love food, guys. Like, seriously, I love food. I'm telling you, like, can't live without it. Like, no, I mean, okay, that was like, not can't live without it, but I love like Mexican food. It's my shit. Honestly, love it. Okay, let's get into this valuation. Don't want to sidetrack too much here. Sorry, man. We have 2 minutes. I'm gonna try and go through this. So here is my ultimate conclusion. Chipotle is fair valued. It's slightly overvalued by 1%, but you know what? We'll call it even, and we'll say this company is fairly valued. Here are my projections. I say that due to COVID impact, this company will only grow at a 3% rate this year. I do see that the stock has upside. I think that, in fact, this is a great opportunity to buy the company, but I also do feel like I want to wait for it to come down a little bit more, if possible. So maybe nibble at a couple of contracts, but I'm guessing that they're expensive. Now, I see a 9% growth rate for the next year, and then a 10% growth rate for the next 2 years, a 12% for the next 3 years, and then back to 10% after, for a perpetuity growth rate. CapEx is meant to be 5-year average at about 5.8. I'm taking a 5.9 average for this year as Chipotle continues to expand stores and invest in its infrastructure. And then I see CapEx dwindling down from there on. So I'm just taking a kind of a regression here to take that into account. Working capital at 5.4% for a 5-year average and the last 4 quarters. So we'll keep that the same for all years and go with that. Depreciation amortization at about 3.9% as of the 10K and the tax rate at about 30% here. 5-year average was 34%, so we're going to take it at 30% roughly, and the discount rate at 7.5, 8%, and 8.5 here. So terminal value comes to a revenue exit multiple of between 3.9 to 4.9, which puts our implied fair value between these values, and then the average of those are 1277-ish. Okay. Which is where the stock, sorry, that's the stock price, but it comes down to 1256.54. So this stock is now actually fair valued. So from my perspective, it doesn't mean that the stock market's not going to buy it up. What I'm saying is that the business is fair valued. It's fairly valued right now. Okay. It doesn't mean that you can't buy it. All it means is it's not overvalued and it's not undervalued. It's right where it should be. Okay. So if it's fair valued, businesses, more than likely, they tend to get bought up. Okay, so keep that in mind. Keep that in mind. Nice, we got to 107 likes. Do you think we can do more? Do you think we can get to 120 today? Oh my god, if we can get to 120 today, I will scream. Or I don't know, I'll do something. Maybe I should do something. I'm just kidding, guys. Okay, well, that's the conclusion of Chipotle here. We have a fairly valued stock. And what were the other things that I wanted to say here? Yeah, no, that was it, actually. That was it. And we have about 15 minutes left. So I'm going to jump into doing some of these breakdowns here. Let's see if I can get these done here. So let's have a look here. What are your thoughts on Tesla calls expiring 18 September? Maybe if you can give me a bit more information, like your strike price and everything else, then I can help you out. Thank you very much in advance for doing that. Let's see here. Okay, this was this. Okay. Let's see. Thoughts on TQQQ 140 for 10.2. I feel like you already bought it too. Ooh, man. You know what? Not a bad idea. I actually do like it. I like it as a play, but oh man. Yeah, you know what? Not a bad play at all. It's not a bad play at all, actually, if you think about it. So we had the bottom out here, right? Let's just say you have your first wave, your second wave. This is actually an ideal entry point here. But the only thing about this is I would love to wait for the breakout instead, above this point. The breakout, and then a bounce onto this support here to confirm and validate this as a support. This is what I want. The problem here is, and obviously I'm going along with like just this chart, right? But obviously we're bullish on this, on NASDAQ. So TQQQ is leveraged on NASDAQ. I agree with your trade, but I wouldn't take it myself until TQQ breaks out here. That's what I'm going to say. Not a bad trade idea. I like it. Boeing 180 for 1023. Man, if Boeing does that, that would be nice. So let me show you guys the king of descending wedges, standing at $200. No, $163. Oh no, $161. The king of all descending wedges. Descending wedge, descending wedge, descending wedge. Boeing Company. Look at this, another trend line that I drew here. It's actually really following it big time. So, so far it's gotten rejected a couple of times here, and I think that we are going to get squeezed again into this channel. So I say don't do that. I would say don't do it. That's what I would say. Again, moving into this channel here. So expect Boeing to come down to this 155 zone very soon, and then I would say buy it up from there. I say don't get into that Boeing contract just yet. Bearish news, It's going to hold the price down for a while. AMD $80 calls. That is a good one. I want to say this is a good one. Wait, what just happened here? Where did it go? There you go. AMD $80 calls for 1023. I like that one. Yesterday, AMD rallied big time. I like this as a bounce play, by the way, guys. Nice little demand zone here. And what I want to see here is actually a breakout above these moving averages. If we can break out and get to this $81 level with good volume and momentum, this is what I want to play AMD for. You know, bound coming up here. So we have that one wave, two waves. This is the ideal time to enter, right? Higher, high, higher, high. And then break out, right? Bounce on this moving average, and then play the upside here. Huge upside here with AMD. So stop trying to catch this and instead try to catch this upon confirmation. That's what I would say. And buy some leaps. That's what I would do. Okay. I am from Singapore. Let's see here. The numbers, Mason, what do they mean? Which numbers? Are ghetto spreads a alternative if you're out of day trades? First of all, the term ghetto spreads does not exist in finance. You learned that from the trading fraternity, which is on YouTube. But to answer your question, what a ghetto spread is simply converting your existing call into a spread. What you are doing is you have, for example, you purchased a $76 call on AMD, okay? And it's expiring this week. And yesterday, AMD moved up to $80. And you said, oh no, I can't sell this because I do not have day trades. So what did you do? Because you bought this call, you sell a $80 call. What you have essentially done at this point is locked in your profit between $76 and $80. Now, if AMD moves above $80, you do not make any money. Why? Because you have sold this $80 call, which now obligates you to sell 100 shares of AMD at $80, which means that now this bought call that you have, which gives you the right to buy 100 shares at $76, now gets offsetted by this sold call. Therefore, capping out your profits and closing out your trade, essentially. The next day, what you do is you close out the sold call and then you close out the bought call, and that essentially in this process, you didn't use a day trade, but you are artificially closing out your trade. That is what we call a vertical spread. Vertical spread, not a ghetto spread. That's what we call a vertical spread. So, yeah. Can one of my mods please time out this guy? Please, thank you. We're trying to keep it civil here, and I really appreciate that. NVIDIA 560, 925. NVIDIA 560, 925. 560, 920. No, absolutely not. I think that you are taken too far out of an expiry. I mean, I like NVIDIA, but I think that you took too far out of an expiry. Like, too far out of a strike price. I would have got like 540 would have still been okay, but 560 is a bit high for such a short expiry. That's next week expiry. CZR, what is that? What is CZR, first of all? Caesars Entertainment. Oh, interesting. Okay. Okay, I see you. Whoa, interesting. Wow. Did not realize that. Let's see here. CZR, CZR 10.9, $65 call. Well, it has had a pretty big run here. I'd say you should probably get out of that right now. $65 call is up here. Let's look at the fib extension here and see what's going on. So actually, it is possible if you're patient. And when was your expiry again? 10.9. Yeah, you still have time on that too. I don't know. It'll need to pull back first before taking another leap up. I think it's possible, but you need to be patient. So if you're willing to wait, then yeah, that's what I would say. I have been using your risk to reward calculator. What a time saver, man. Thanks. Yeah, absolutely, Jeremy. No problem, man. I'm glad that you are using it. That's really important. You just made me laugh out loud. Almost spat out my coffee. Wait, why? What did I do? I didn't say anything. Chipotle, it's dope. How do you decide which to use in a situation between call spreads or put spreads? I know they call both used for bearish or bullish scenarios. Yeah, yep, exactly. It depends on the situation, right? Right here, what you want to do is it kind of boils down to what you're trying to do. First of all, there are 4 different types of spreads that you can orchestrate. There are bull call spreads, there are bull put spreads, there are bear call spreads, and there are bear put spreads. And each one of these scenarios have different kinds of situations that you'll use them in. If you're in a bull call spread, you're essentially doing a vertical call with two call options, right? That's what the bull call spread is. If you're doing a bull put spread, what are you doing? You're selling puts. You're selling puts on the bottom here in the expectancy for the stock to go up. That's a bull put spread. If you're having a bear call spread, then what are you doing? You're selling calls up here so that the price comes down. You're expecting the price to come down. If you're in a bear put spread, then you're doing a put spread here. You're buying a in the money put and you're selling out the money put. There are different ways to look. I'm teaching this in an intermediate course right now. You should probably take the intermediate course next month if you want to learn more about this. This is exactly what I'm teaching in class today. What studies and timeframes are you using? I have an entire indicator breakdown on this video here. I highly recommend you to go check it out. Go to my channel, click on this thing, go to playlists, click on growth webinars, click on the playlist, and go click on this video, intro to charting. You'll get your answer. I spend 52 minutes going through my entire setup there. Is it wise to be a put day trade today? It's possible. I wouldn't disagree with that. That's from COD Black Ops. Okay. I see. I see now. Okay, I understood. Yo, 4 more likes though. Can we get to 120 likes though? Can we? Come on, 4 more people. Smash the like button. Smash it. Let's get it. Okay, and we are 3 minutes away from market open, so I'm going to say thank you, bid you farewell, and thank you for attending another great live stream. I hope you guys enjoyed this live stream. We cover a lot of important things. I forgot to cover one important thing. Okay, guys, sorry. This is for those of you that sticked around and, you were patient with me. Thank you for sticking around. So let me give you guys a golden nugget here. Now, this is what I'm thinking about as a trade idea. Okay, I've been following gold and silver for a while, and I'm starting to think that silver is looking attractive again, and gold too. Okay, now if the Fed decides to stay with the interest rates that they are right now, remember one thing, that there will be a adjusted inflation target, right? They want to keep inflation higher than usual, higher than 2%. What does that do? That means they're going to print more money. Okay. And if they print more money, what does that mean? That means the dollar is going to go down in value. Okay. So in anticipation, what are people going to do? If dollar goes down in value, do you see what gold and silver are pegged against? Do you see they're denominated by the dollar? Okay. They're denominated by the dollar. So if dollar goes down, gold and silver goes up. Okay. Simple concept. Now, I also did see that there is some possibility for bullishness up here. So I may consider taking some silver calls because I like the risk to reward ratio on silver than gold. Okay, so this is your silver. And I'm thinking of taking maybe some $29 calls, maybe by December or November. That's what I'm thinking about. This is just a working theory. Don't at me if it doesn't work. This is just what I'm thinking about right now. So good luck if you choose to play it. This is a little bit of a gold nugget that I'm going to drop for you guys. Apart from that, have a great trading day, guys. I'm going to have a live session with my mentees later, a live trading session at 10 p.m. 10 a.m. Eastern time. So I'll see you guys tomorrow for the webinar. Please come through. Going to do trade confirmations. How do you spot them? How do you do them? How do we get past them? And have a great trading day, guys. Peace out and bye-bye.